One of my first YouTube videos was about health insurance options for early retirees. I've spent a lot of time researching and planning for health insurance for my early retirement. This is one area people often overlook. For those that don't have other choices, there's COBRA, Affordable Care Act, and Healthshare plans. I'm going to share what I've learned and what I decided to do myself. My health insurance through work ends August 31st. I've been leaning toward ACA with subsidies. My AGI will be fairly low starting in 2025. I looked into ACA with my projected retirement income, and it looked like it would be fairly low cost for me. I've mentioned this in other videos. I have a health reimbursement arrangement, an HRA, through my work. It's similar to a health savings account, but there are some differences. I attended a webinar recently to learn more about how to use my HRA in retirement. I found out that I can't qualify for ACA subsidies as long as there's money in my HRA account. Who'da thunk? This seems irrational to me because all the money in that account has been pulled out of my paychecks over the years, and it's not a huge amount. I also learned that you can't submit older medical receipts for reimbursement with an HRA like you can a health savings account. Lessons learned and time for Plan B. COBRA, even with a high deductible plan, would be about $700 a month for me, and ACA without subsidies would run about the same. Subsidies make a huge difference. I have the option to either use up my HRA over the years and then qualify for ACA subsidies, or elect what's called limited coverage. If I elect limited HRA coverage, it would only reimburse dental and vision, nothing medical. If I used my HRA to pay for COBRA or continuing coverage through work, it would run out in about 4 years. It'll be 6.5 years until I can get Medicare. I've spent a lot of time researching my options. At this time, I'm healthy and I don't take any medications. In the last month, I had an eye exam, a dental cleaning and x-rays, and a medical exam. I had a mammogram, yearly blood work, and Cologuard. That's a fun one. I got a clean bill of health. So here are the 3 options I personally considered. Option 1, use a Healthshare plan for 6.5 years until I can get Medicare. That would run about $300 a month. With this option, I could use my HRA funds to pay for all out-of-pocket medical expenses, aside from the $300 a month Healthshare premiums. My sister, who retired early, has been using a Healthshare plan for years. She really likes it. She uses Christian Health Ministries. Dave Ramsey recommends them. I know a friend of a friend who also uses Christian Health Ministries. She had a heart attack and ended up in the hospital for several days. Christian Health Ministries paid all her bills after that initial unshareable amount, which is kind of like a deductible for each incident. I've read a few reviews of Healthshare plans where bills didn't get paid. But I've also read reviews for many medical insurance companies that refuse to pay for a service too. I think this can be an issue no matter which way you go. Option number 2 is to elect limited coverage for my HRA, so it would only cover vision and dental. Then I could get ACA with subsidies for 6.5 years, as long as it's still there. At that point, I would qualify for Medicare. This would cost me $200 to $250 a month for a decent plan with a $6,000 deductible. I was looking at Kaiser. There are cheaper plans, but they don't have very good ratings. Then, at age 65, I could switch my HRA back to full coverage, where I could use it to cover Medicare premiums and medical expenses. But I'd have to pay all co-pays, deductibles, and medical expenses out of pocket for 6.5 years. Option 3 is to elect limited coverage for my HRA and go with the really cheap ACA plan. This would be for now while I'm still healthy. I could try it for a year and see how it goes. I could always switch to another plan in the following year. Ambetter is the company that comes up as either free or very inexpensive for me. But they don't have very good ratings. It's a health maintenance organization, an HMO. This means coverage is limited to doctors who are either in the network or contract with the HMO. It generally won't cover out-of-network care unless it's an emergency. HMOs have lower monthly premiums. You do need to have a primary care provider, which I do. I checked with my doctor and she does take that insurance. If I went with this option, it would kind of be like catastrophe insurance for a year or two. It's also got a $6,000 deductible. One thing I learned is Washington State is number 3 in the top 5 most affordable states for healthcare. So no state taxes and lower prices for healthcare. Go Washington! I'm only allowed to roll 25% of my unused sick leave into my HRA after retirement. I'm just going to lose the rest. It is what it is. My HRA should have about $33,000 in it after this is completed. This will happen at the end of August. I've been contributing to this account since I started teaching almost 20 years ago. I've never used it, instead letting it grow for retirement. I did learn a couple of interesting facts that I learned while researching that I thought I'd share. One is the fee for not having medical insurance, or the mandate, ended in 2018. I didn't even realize this had ended. This means you no longer pay a tax penalty for not having insurance. Except that California, the District of Columbia, and Maryland apparently have their own rules. And I am not suggesting going without health insurance. I'm just pointing out that there's no longer a fee. The next one is interesting. COBRA is one of the only insurances that can cover retroactively for up to 2 months. So you can use it like catastrophic insurance. For 2 months, you can pay out-of-pocket medical expenses, but if you have a catastrophe, you can then pay retroactive monthly premiums to cover the catastrophe. After you leave your job, you have 60 days to elect COBRA coverage with your former employer. This is sometimes called the 60-day loophole. Even if your enrollment is delayed, you'll be covered by COBRA, starting the day your prior coverage ended. I considered going without health insurance for a couple months. September through December, I'll still be in a higher tax bracket and won't qualify for big ACA subsidies. So if I had a catastrophe in September or October, I could use COBRA retroactively. But then I'd be without any insurance in November and December. I don't know if I want to take that risk. And short-term health insurance plans are currently not available in Washington State. Ultimately, I decided to go with option 3 for now while I'm still healthy. I'll elect limited coverage for my HRA and sign up for the really cheap ACA for 2025. I'm going to try it for a year and see how it is. I'm covered in case of a catastrophe, like breaking a bone or appendicitis or cancer or something like that. I can always switch plans in a year. I can also reverse the limited HRA coverage in the future. So that's what I've decided for now. I'll sign up in November when it's open enrollment. I'll let you know how it goes. If any of you are seeing me for the first time, hi, I'm Julie and this channel's Happy on Monday. Thanks for joining me. If you found this helpful, please like. And if you're interested in early retirement, consider subscribing. I'm going to leave you with the quote. Each setback is an opportunity for a bigger comeback. Hope to see you again soon.